Don't know where to start your investments from? No problem. I got you covered. So, hey promoters, welcome to Promo. I make money, finance, and business easy for you. So, let's jump right onto the video. So today I will be telling you 5 different ways where you can start investing your money and 4 different criteria to evaluate them. So now let's understand the criteria. First one is risk. What is risk? Risk is nothing but the possibility of you losing your money. Second is the time. This is the time period for which you will be investing your money. Third is liquidity. Liquidity tells you how accessible is your money when you need it back from that particular investment. Fourth is the returns. Returns is something that you can expect from your particular investment. So it can be low, medium, or high. Now let's move on to the investments. So first one is stock market. What is stock market? Stock market is a place where buying and selling of publicly listed companies takes place. So it is also known as equity market or share market. So here you can invest your money into companies which you believe will give you good returns in the future. But before investing here, it's very important that you thoroughly research each and every company you want to invest in, because wrong companies can give you big losses. So now let's evaluate stock market based on a criteria. So first one is risk. The risk is high. The reason for that is there are various things happening around you. So it can be events, speculation, news, which influences the stock market prices of the companies and also the overall stock market index. So it can be very fluctuating and volatile at times. So let me just give you a basic example. Before the start of the pandemic, the markets were pretty stable. But after the news hit the markets that the pandemic has spread across the globe, the global market and also the overall stock market indexes around the world were affected. The second criteria is time frame. So time frame here is mostly between medium to long term. So I say that because it also depends on your goal, because let's say if you want to do a vacation next year abroad, so you will invest in some of the companies which will give you optimum returns to spend on your vacation. Or for the long term, for example, if you say the retirement plan or your education, so it is something which has a long term perspective, so it can be mostly from 5 years, 10 years or 20 years. So that's why I say it also depends on your goal. So the third criteria is liquidity. So liquidity for stock market is medium. It's because it might take 3 to 4 business days to get those funds back into your account after you sell stock. It also depends on the regulatory procedures, and also sometimes if we have bank holidays, so it might take some time. So the fourth criteria is returns. So as I mentioned earlier, that risk are high in stock market, but so are the returns, because with high risk comes high reward. So if you invest into the right company, you might end up getting good returns. So the second way of investing is into the index funds. What are index funds? Index funds are part of stock market which tells you the performance of a set of companies or also the overall stock market. So we have different stock market around the world which have different names of their indexes. So for example, the Bombay Stock Exchange in India has the name called Sensex. The American Stock Exchange has named Standard & Poor, or also known as S&P. So here what you are going to do, so here you invest your money into the index. So index is a measure of the set of companies, not an individual company. So for example, if you invest into the index and even if one company is not performing good but the others are performing well, it will drive the overall index up and you will end up getting good returns. So now let's evaluate index funds with their criteria. So the first one is risk. So the risk here is medium. It is because you are not investing into an individual company but a set of companies, which significantly reduces the risk from high to medium. So the second criteria here is time frame. So time frame for index funds are medium to long term. It's because as compared to the individual price of a stock, indexes might take some time to give you your desired returns. So that's why you need to be invested from medium to long term. The third criteria here is liquidity. Liquidity for index funds is same as stock market, which is medium. So the fourth criteria here is returns. Returns are medium for index funds because you are investing into the set of companies. So it's very important for the majority of those companies in those sets to perform well for you to get good returns. So the third way of investing now is mutual funds. So what are mutual funds? Mutual funds is a pool of money from many small investors to invest into a commodity. So what happens here now? You invest your sum of money into your mutual fund. So it can be any amount. You can even invest the smallest amount, maybe of $10, $5, etc. So here there are many small investors just like you. So your fund manager will now invest money into different commodities. So it can be bonds, stocks, money market, etc. His only objective is to provide you good returns. So it's not your headache where he invests your money. So the best way to invest into mutual funds is via SIP, which stands for Systematic Investment Plan. So here what you do is you invest a sum of money regularly into your mutual fund. So it's still not clear for you what are mutual funds. No problem. I have a very good example which will explain it to you what mutual funds actually are. So let's say at any given point of time in your life, you might have used the service called Uber Pool. So let's say there are 3 people who want to travel to the same destination, but if they travel alone, the cost of the journey is very high and unaffordable for each one of them. So what they do is they travel to the destination together. So instead of traveling alone, now they are traveling together and they are sharing the cost. So in this example, those 3 guys are the people who want to invest money into the mutual funds. The cab is where your money will go as an investment, and the cab driver is your fund manager, whose only objective is to give you profits. So now let's analyze mutual funds based on a criteria. So first one is risk. So the risk for mutual funds is medium. It's because your fund manager will put your money into different areas. So this diversified investment reduces the risk significantly from high to medium. So the second criteria to evaluate is time frame. So time frame is between medium to long term. So it also depends on your goals, as I stated earlier. So you can invest accordingly into small cap funds, mid cap funds, or big cap funds. So the third criteria now is liquidity. So liquidity for mutual funds is medium. So there are various factors involved, such as companies, policies, and regulatory procedure. So it can take about 3 to 5 days for your money to get back into your account. So the fourth criteria now are returns. So returns for mutual funds are mostly medium to high. It's because when your fund managers invest your money into different areas, so they might perform differently, so you might see a variation in your returns. So the fourth way of investment now is fixed deposit. So what are fixed deposit? Fixed deposit allows you to invest your money for a fixed period of time and make good returns on a fixed interest rates. So what happens here is now that you invest your money into the fixed deposit, and after your fixed deposit is mature, you get your money back. You can get fixed deposits from any of your trusted banks. You can go there and complete the procedure for it. So now let's evaluate fixed deposit in regards to the criteria. So the first one is risk. The risk is low. It's because most of the aspects of fixed deposits are fixed, such as fixed period of time and fixed interest rates, keeping the risk level low. So the second criteria now is time frame. The time frame is usually long term. It's because the average period involved for fixed deposits is mostly between 5 years to 20 years. So the third criteria now is liquidity. The liquidity for fixed deposits is very low. It's because the amount which you have invested into the fixed deposit is locked for a specific period of time. So you can't withdraw your money early. But if you do an early withdrawal, you might end up getting fines or penalties. So the fourth aspect now are returns. So returns for fixed deposits are medium. It's because, as I mentioned earlier, that we have fixed aspects for it. So we have fixed period of time, fixed interest rate, and so are the returns. So the fifth way of investing is saving account. So what is saving account? Saving account is a type of bank account where you keep your money and you get interest for it. So what happens here? So you simply go to a bank, open the account, keep your money and use it. So now let's jump onto the criteria for saving account. So first is risk. So the risk here is low. It's because we have no fluctuation or volatility just like we have in stock market or index funds. So now the second criteria now is time frame. The time frame is short. It's because the money is in regular use and it's going out and coming in regularly. So the third criteria now is liquidity. The liquidity is very high for saving account as the money is easily accessible and you can easily withdraw your money via debit card, checks or online transfers. So the fourth criteria now is returns. So the returns for saving account is low. It's because we get a bare minimum interest annually, which is 4 to 5%. So that was all from this video, guys. Thank you so much for watching this video. If this video brought even the tiniest bit of value to you, please consider subscribing my channel. So guys, this is my first video, so I'm aiming 100 likes for it. Your likes will motivate me to make more valuable content for you. And guys, don't forget to press the bell icon. It will give you notification whenever I upload a new video. And guys, let me know in the comment section below in which of these investments you have put your money. And you can also share it with someone who really needs to see this video. For more contents and updates, you can also follow me on Instagram, Facebook, Snapchat, TikTok. And lastly guys, if you like my work, you can also support me on Patreon. All the links are in the description below. See you guys in the next video. Till then, keep promoting.